Hi there, welcome. In this video, I want to talk about the main differences between investing in stocks versus investing in funds. So the main difference between investing in specific company stocks versus investing in diversified funds that have a lot of different company stocks within them. There are pros and cons of each. Let's say you're an investor and you want to build a portfolio and you want to start investing in 5 companies: Apple, Google, Amazon, Netflix, and Facebook. Okay, so that's pretty good. That's a pretty good start. Those are 5 big US tech companies. Nothing wrong with investing in those companies, I think. So let's look at what the current price share of each of those companies' stock is currently trading at. Apple is currently trading at around $130. Google is currently trading at around $2,250. Amazon is currently trading at just around $3,000. Netflix is trading at $555. And Facebook is trading at around $300. So all of that added up, if you were to want to buy one share in each of these companies, you would need just over $6,000 just to buy one share in each of these companies. Now, most of us don't have that kind of money to invest every month, so we would probably have to save up. We might have to wait a few months just to save up enough to buy one share. For example, Amazon is trading at around $3,000 per share, so some of us might have to save up a few months just to buy one share of Amazon. So we can start to see that it's going to get a little bit complicated if we want to buy specific company stock in these 5 companies. We may have to save up a few months. We may have to wait up in the sidelines in order to save up. And it's gonna take a lot more time to build this portfolio. And it's gonna be harder to be diversified as well, because if you buy $3,000 worth of Amazon shares and then you have to save up a few months to buy more shares in another stock, your portfolio is gonna be balanced because it's gonna be heavily balanced on Amazon. Now, you may or may not want that. If you're looking to buy shares in these 5 stocks, you might want to look at a fund. So let's look at a fund. And for this video, for this example, I'm going to talk about 2 funds. The first fund is SPY, ticker symbol SPY. Now, this fund follows the S&P 500, which are the top 500 stocks in the US. So you're definitely going to get those 5 stocks as well as 495 more top US stocks. SPY is currently trading at around $400. So for $400, you can buy one share of SPY and you are automatically investing in the top 500 stocks in the US, including the 5 stocks in this example. So that is a lot more feasible or easier or approachable and realistic, definitely more achievable than $6,000. You're gonna be able to buy into this fund each month, a lot more easier. You're gonna be a lot more diversified. Your portfolio won't be out of balance. You're gonna be taking timing and the stress and trying to pick which stock to buy when out of your strategies, so reducing your stress. So if there are stocks that you're looking to have in your portfolio and you can find them in funds, I would definitely recommend leaning towards the funds. Now, another fund is QQQ, which focuses on top US tech stocks, which is another fund that has these companies in them, and QQQ is trading at around $300 per share. So $300, $400 is a lot more realistic than something like $6,000. It's gonna be a lot easier, a lot quicker, a lot more diversified and balanced, a lot less stressful. So there's definitely pros in investing in funds. I know that funds don't sound as exciting as investing in companies, but you are still investing in these companies, don't forget that. Now, there are benefits in investing in specific company stocks as well. For example, again, if you can't find a company in a fund, then yeah, I guess you have to buy the shares. You have no other option. But if you can find a company in a fund, but you want to buy a bigger position in that company, maybe if the fund is a little bit too diversified for you, you want to build a bigger position in a specific company stock, well then yes, then buying the company stocks and the shares makes a lot more sense, because that is the best way to build a bigger position in that company or in that stock. So if you're looking to do that, if you're looking to build a big position in a specific stock or company, then yeah, buying the shares and going for the shares is definitely a good option. Now, if you're looking to invest in a lot of different companies and you're looking to build your portfolio and you're just looking to invest a little bit over time and you don't want to think about too much about which stocks you want to buy and when, you just want to kind of narrow in on a bunch of different stocks, then yes, you should be able to find some funds that are going to hold those stocks that you want in them, and it's going to be a lot easier for you to build positions in those funds, and over time it's going to be a lot more diversified for you, a lot more balanced for you. So those are the things that I wanted to talk about in this video. I hope you understand what I mean. I hope this video helps you with your investing endeavors. If you like this video, smash that like button. If you haven't subscribed to the channel yet, definitely subscribe. I'm going to wrap this one up, so I will wish you a good day, a good night, and I will see you next time. All right, until then, cheers.